Did you know that student loan debt in the US is equal to $1.73 trillion and that it grows 6 times faster than the nation's economy according to educationdata.org? If you are a non-traditional student, the struggle is even harder.
The College Disruptor.
Hi ladies and gentlemen, welcome to another video of our Disruptor community. Here at Gradehacker, we enjoy being a guide for non-traditional students. We know firsthand that student loans are one of the many concerns our student clients have. When it comes to financial education, the US doesn't have the best system. Even though they have made education affordable for millions by subsidizing it heavily, they still make students carry high loans for several years after finishing their education. The combined number of private and public loans is high, with nearly 4 million people still carrying student loans that aren't being repaid. There are 3 factors that have led to the student loan crisis. The first one is private loans. This means that the government does not give these loans out. They are given by individuals and financial organizations. One of the main reasons they become so dangerous is that you may get too deeply into debt, which will hurt your ability to borrow in the future. The second is government subsidies. This is usually common in some countries, but not in the US. Many students are borrowing more because college tuition has increased many times faster than income. The US pulled back funding for public universities and college in the wake of the Great Recession. And that's why the cost of college resulting in debt is higher than in almost all other countries worldwide. And the third is disconnected incentives. The attention that some financial organizations pay to student loan repayment is not always the best. As a result, around 9 million borrowers are in default on their loans since the US Department of Education doesn't track borrowers regularly. Actually, most colleges don't even take the time or responsibility to educate their students about the federal loan process, and they don't make a significant change in their policies about it either. And before we continue, remember you can visit our Learning Center to find this video as a written article and explore all the college topics we have for you. Most recently, Senator Elizabeth Warren proposed the Student Loan Fairness Act, where students that have loan terms with the government will have the option to pay the same interest rate that the Federal Reserve charges to big banks. The Student Loan Fairness Act would also offer borrowers the 10-10 loan repayment plan. This means that your undergraduate loan balance will never surpass the original balance, no matter the time it takes to repay, since it provides a maximum capitalization of 10% of interest over the loan taken out. On the other hand, in 2018, the Levi Institute published a research project for canceling all outstanding student debt called the Macroeconomic Effects of Student Debt Cancellation. This would lead the federal government to assume payments for loans held by private lenders on behalf of borrowers. And as a final solution, there's Bernie Sanders' proposal to make college free and cancel direct loans or any loan type and reduce the cost of college. Here are the key points of his education cost proposal. Guaranteed tuition and debt-free public colleges, universities, HBCUs, which is historically Black colleges and universities, minority-serving institutions, and trade schools to all. Cancel all student loan debt for some 45 million Americans who own about $1.6 trillion and place a cap on student loan interest rate from now on to 1.88%. Invest $1.3 billion in automatic payments every year in private, nonprofit, historically Black colleges and universities and minority-serving institutions. End equity gaps in higher education attainment and ensure students can cover the non-tuition cost of attendance by expanding Pell Grants to cover non-tuition and fee costs, tripling funding for the work-study program, and more. Keep in mind that this is still not a reality and it may never be. However, a few states and institutions have included some free college program variations. One of them is the University of Michigan. They created the High Achieving Involved Leader Scholarship, promising qualified low-income students a 4-year education without paying for the cost of attendance. Easy access to these federal student loans have reached over $1 trillion in total. That's crazy, don't you think? It's alarming the colossal percentage that can go up over the next few years. Imagine that after 6 years, for graduate students, the average student loan debt interest is almost $25,000. Student loans are basically part of a family budget now. Many parents start saving from the birth of their children so they can receive higher education. Sadly, this prevents most students from saving for the future, buying a home, opening a business, or pursuing higher level education. If you agree that a change needs to be made, comment down below your thoughts. And if you like this video, give it a thumbs up, share it with your friends, and subscribe to our channel. See you in another video.